Hello everyone, welcome back to another Lumley trading live streams. And markets open in about 3 minutes from now. We'll go over the earnings from last night. Again, obviously we do put the video out before on what we're looking at and the levels we're paying attention to. Like we said yesterday, it did seem a bit more like a boring day. I think there was only about two of the stocks that were releasing earnings yesterday that we would actually expect to come into any sort of levels. And I think they're the two that actually did, and the rest, yeah, had very kind of lackluster moves. So we'll go through those and see how they have properly reacted. So let me just put up the calendar so I can see all the key names you're paying attention to. So yeah, yesterday we had Palantir, Lucid, Chegg, Paramount, Beyond Meat, and then pre-market we had UPS and Nvax. They were really the key stocks we were watching for after hours yesterday and pre-market today. And just to note, after hours today is going to be quite a big earnings day. Not massive names, but names that move a lot. So you got Rivian, you got AMC, you got Upstart, and you got Twlo. Those four names can do massive moves, so definitely something I will be paying attention to. But again, we got about a minute and a half till markets open, so we'll go through the levels that we did yesterday, so we can start seeing how these started to play out. So again, yeah, with Palantir, we were not really near any levels. We were obviously at this around $17.18, but as we were near this yesterday, we did kind of say, not really expecting too much of a move, will probably be lackluster, and again, that's basically exactly what happened. So Palantir, we weren't really looking for too much. Over on Lucid, we were just miles away from any key levels. So you can see basically flat, we're basically going to open flat on the day. But we could see the closest level was $5, closest resistance was $8. Quite unlikely that we were going to make a move like that. Also did see on Lucid as well, I didn't actually realize how much money they were losing, but on each car they sold, they were losing $550,000, which is still actually down from last quarter. Last quarter, I think they were only losing around, well, they were losing around, I think it was 800,000, so it was coming down, but I didn't realize it was that big of a money trap as of right now, which is, yeah, really just quite crazy, to say the least. So that was Lucid, but again, wasn't really expecting any sort of key levels. I'll quickly do that. Let me grab the earnings again, because I quickly went away from the page. So then we also had Chegg. So with Chegg, again, we did actually point out this $12 level. It seems like we succeeded this, but we can see obviously we came into it. We did get a small retest. Markets have just opened, by the way. We did get a small retest, and then we break through after hours. Again, normally we're not trading the after hours, we're waiting for the open, but we can see obviously pre-market, we've come back, we've retested this $12 as a support. So Chegg could be quite bullish. Again, don't forget we're up 30%, so take some caution, but definitely could see a bit more of a bullish move. Then on to Paramount, so ticker PARA. Weren't near any key levels, so again, wasn't expecting anything too crazy. We're up about 2%. Would have needed a move to $19 to the upside or $13.50 to the downside. So again, just quite far off levels in general. And then the last name we were paying attention to was Beyond Meat, which I think had a quite strong sell-off. Yep. So with Beyond Meat, didn't quite hit our key level after hours, but again, pre-market we have been selling off. Obviously after hours when the earnings came out, we dropped, confidence continued it down, and then pre-market we're continuing this downward move. So we do have our level here around $11.90. So a key support on that Beyond Meat. If we can come down here, potentially looking for either a swing or a bounce. I would be a bit more cautious on the swing side, just because again, if we zoom out, obviously from the 6-month perspective we're downtrending, 1 year perspective we're downtrending. I'm never as happy to take these long buys, especially when you're still near fair value on one of the charts, which we can see we are at the 1 year. So we'd want to see a bit more of a sell-off from kind of 960, then I could turn more bullish, because if we'll be at the 52-week low, we're then oversold on both then the 6-month and the 1 year. So I think that'd be a lot nicer of a level to play, so I'll be paying more attention to that. And then pre-market today we had the UPS, which we did cover, didn't quite hit a level, but we are getting quite close at 186.50. But yeah, that was taken. Well, actually, it's quite a weird move. Wasn't properly paying attention, but yeah, we gapped up on this move, and then straight into the open we've just given back all this gain and started to sell off. But anyway, resistance 186.50. and a support quite far off at 172.50. So they're the key levels I'm paying attention to on UPS. So we'll see if we can start hitting them. We'll quickly go over Nvax, which is ticker NVAX, and then we just had an alert go off on Citi. So we'll check out what's happening over there. So Nvax, we did a video on this, I think, last week. Levels haven't really changed. We haven't really updated them. They might have moved by a few cents, but from a resistance, only thing we could be paying attention to, that's $9. Now, on a stock like this, I only trade them short bias, because to me, I mean, obviously, this is more of a drug type, more biomedical type. But any sort of stock like this, where you've got super strong downtrends on the 6 month, super strong downtrends on the 1 year, a stock that went from $62 down to $5, I prefer just to short into these. Again, they can definitely squeeze and they can definitely run. So it's not shorting them nakedly. That could be quite stupid. But what we can do is short them, buy calls to define that risk. In the high probable chance you get that pullback, we're good. And if we do get unlucky and it continues to run again, we buy those calls just to prevent us having massive losses. So looking at that on Nvax. So again, those were the after hour ones from yesterday and the pre-market earnings from today, which were the key things we were watching. SPY as well, gapping down over 0.5% on the day. Berkshire starting to be down about 1% on the day. KKR down about 2.5% on the day. So they can all be key things to note. We'll throw out the key, I guess, names. We'll put on Palantir, we'll put Lucid, and we'll put some... I think Nvax could actually be a name we pay attention to today. So we can just put these names up, start seeing a bit more how they start to react. Don't know why this one looks so weird. There we go. So yeah, we can start seeing how these react a tiny bit more. And obviously we'll be checking out AMC, Rivian, Upstart, I think are going to be the key ones throughout the day. But I guess we'll run through them, so they'll be on this chart over here. Just while we run through what we're looking at on these, just in case. Well, I mean, if you're in the stream, then you don't need to watch the videos. Well, we'll go through the key levels. So the first one was Rivian. So Rivian, I just want to point this out, and we'll quickly put the main chart on the screen. The thing with Rivian, I would be a bit more cautious on this. So we did call it short. Obviously, we got this nice short around $26. But before that, we weren't really respecting the level. You can see this was the first short bias opportunity. This was the second. So it acted as a support, that second one. So not going to be taking a massive loss. That would have just been, you know, a break even. This level worked out quite well. So I would be more cautious on this, because considering kind of the lack of respect it's had for these levels in the recent tests. So I wouldn't mind. I'm probably not touching this $29 rough level. Instead, I'd be waiting a bit more patient. And if we can push up on this earnings from $32.50 and above, that's where I like this, because then we're at extremely overbought levels. We're at those third deviations. And again, these third deviations at 99.7% of data should trade below that level. So once we start trading up at these kind of extremes, I'm quite happy to play that reversal. Yes, you will get the occasional loss, but winners will far outweigh it. And you, on these kind of trades, unless you're playing vertical spreads, you can get a much better than a one-to-one risk to reward on a trade like this. So the key levels haven't really changed. So you still got 37.75 on the high end. You still kind of got this 32. I mean, we can change that to 32.75. But they're going to be those key resistances. We have about 29.25. This is the level we haven't quite yet hit, so we can be paying attention to that. The 6 month level is slightly higher. We have already hit this one, so again, a bit more caution on that. So yeah, I wouldn't retrade this. Even if earnings hits that level, I wouldn't retrade it, because we've already hit that level. So instead, again, I would be more patient, 29 or above, but I'm really waiting more for that 32.75 or above to start trading this. And then I guess from the support side, we have $20.75. And I need to grab that, which will be then the 8th, and then that is 21.65. So they're going to be roughly the key levels that we're paying attention to on Rivian coming into earnings. Upside targets, downside targets, and if we did somehow break that $20 level, which I mean could always happen if there's a big shock, we then have fair value at $16. But again, that's normally a level we trade to, not off of. So if we're short bias now, or we have some sort of vertical spreads we sell off into earnings, that would be kind of that final target. I probably wouldn't look to hold through a level like that. So that's Rivian. Then we have AMC. So levels haven't actually really adjusted on here either as well, because I mean they're basically just pretty flat stocks as of right now. So 538, that's our first deviation on the 6 month. Slight adjustment on that down at 30. We kind of just do more of the key levels because they're not moving all that much anymore. So we change that to just 45, kind of just get the psychological numbers in there as well. 730. You then have, actually these 1 year levels have adjusted a bit further. Then we have 110. Again, to the downside, when you see these deviations adjusting to the downside. So again, you go back, I think this was when we had this move, because that's when we traded it short bias off that news that they couldn't convert those shares and basically dilute shareholder value. Overall, that was still bad news. Again, we covered that on the day. Just because, and again, just for future reference, if a company's trying to dilute your shares, even if it gets rejected from the judges or the court, whatever, yeah, you'll see a pop off that news, but overall you will sell off because it's a company trying to dilute your value. And why would you want to invest in a company that's trying to weaken your position in it? So yeah, we sold off on that. But again, these levels have adjusted quite far off that. I mean, you're seeing that third deviation adjust by about $1. So quite big moves. And again, when you see them moving to the downside, just showing you the weakness in a company like AMC. So if we did pop off these earnings, again, if we push to the downside and not really paying attention to it at all, I'm definitely not buying a company like this. So to me, AMC is only an opportunity. If we push to the upside, then I can look short bias. 620 or 630 to 645 would be that first level. 730 would be the one after that. 1010 and 1375, basically all those key resistances if we continue to push to those upside levels. Now, if we continue further, we then have Upstart. Now, this stock could be an interesting play because this stock has just been crazy. I mean, you go back a few months, we were trading at $12. Did this upward move, we came into a deviation around this level, you got that pullback, but really got bought up quick. We continued up, and there was another deviation like around here, around that $50, which we just didn't even respect. We just went straight through, continued up, and you can see these deviations have readjusted. I mean, this before was like above that fourth deviation, so this stock is was super strong. So would be a bit more cautious on a stock like this. It looks like we are finally getting that pullback now, though, back down to fair value. And again, that's why we don't tend to get into trades with full size right away, because in a stock like this, if we were holding it, we want to be able to kind of get some more short size up at these highs for when the levels readjust and we do eventually come into that fair value. Because again, it wouldn't have been too hard to adjust. I mean, even if we got in at the second entry around that kind of 57, we would have been fine. But, you know, if we're able to add in nearer those highs as you're coming into key levels, you can just make those trades into fair value so much more profitable. We may even potentially come into the level today at 44.75, which is our first deviation on the 1 year. So definitely something to be paying attention to if we come down to there. Yesterday, it seems like we did break as well 55.80, which is our first deviation on the 6 months. So we'll quickly zoom out in a sec, see how these levels are respecting and acting from an intraday perspective to see if they're day trade worthy. If not, we'll probably just be looking at them from a swing trade perspective after the earnings release. So we'll put that level on. Again, we'll kind of just be a bit more prepared, just put them on all the sides. Because again, earnings is always going to be a gamble. At the end of the day, we don't know which direction it goes, so it's just being prepared for either direction that it does go. So then we have 68.80, and that is our third dev solid line. So basically, key resistances, yeah, $67 to $70 will be the key resistances. Again, we got a small support at 44. What was that? 44.75. Again, not too focused on that because we're going to most likely move quite far off of that level of earnings, so probably not going to be respected all that much. So if we hit those upward resistances or we start pushing down and testing these supports, which again we'll just put down basically the closest to, because it's unlikely that we're going to sell off, you know, 20 points off earnings. So I guess those would be the levels I'd be paying attention to on there. We'll just note down the fair value as well. So it does look like either Upstart will become extremely overbought once again, or we'll most likely just start trading into the area of fair value. So to me, it's most likely if we sell off, there's no trading opportunity. If we get bought into earnings, then obviously $70 or above, I'm quite happy to be shorting this stock. So then the last name that we want to cover for earnings after hour today will be Twlo, ticker TWLO. Ignore this. This is just from some testing things I'm doing. But right now we can see Twlo, at least on the 1 year, we're kind of sitting at fair value, a bit oversold going on to that 6 month though. So we do have a level that's at 58.13. So we just put 58.10. So again, I would kind of ignore this level coming into the earnings because it's so close to current price. It's not going to be respected. We'll just smash straight through a level like that. So from a support side, we have $20 and $50.25, which would be our second dev, or the first dev from the 1 year at around 47.50. So I guess those would be the support levels I'm paying attention to coming into earnings. What kind of move actually does that require? It's a 20% move, so maybe we'll put one level out further just in case we got quite a monster move. Again, better to be prepared than not. So then we also have fair value around, actually we can kind of get rid of that, because if we go to the upside, we have that 67.50, 73, 77. I think they're the only levels that we'll need. So we'll put those up. And then we should be all good from the earnings perspective, or at least should I say prepared for this earnings perspective. But I am liking the look of the earnings today. I do think this will definitely provide some opportunities coming into tomorrow. So again, going to be quite a big watch, I think, these names for after hours today and just getting ready for tomorrow in general. But again, those are the key earnings names. SPY's continuing to sell off, or the S&P in general, we're down 0.8%. Really starting to see the futures really respect this anchored VWAP. So again, good to see how this is reacting, but each time we're coming back to retest this, showing us its weakness. We keep pushing these lows. Looks like we're trying to push yesterday's lows as well, so we'll start seeing how that reacts. Bonds are still quite strong, or at least holding up, pretty flat on the day, but they are holding up. The euro is showing weakness, which again, strength in the dollar. VIX is gapped up again today, holding up nearer these high levels. For quite a while, we were staying near around the $12 to $14 level. More recently, the last kind of 4 or 5 days, we have been chilling much closer to this $17 to $18 level. So a lot more fear in the market as of right now. Twlo looks like it's coming down to test that key level as well, that 58.10, so we can start seeing if we get some sort of a bounce off that level. Again, Palantir cracking through that 17.18. Again, we're not respecting those levels when we're just so close, so I don't really pay too much attention to them. Another strong move, it looks like, on the S&P, so quite big moves in general. We went through all the key things. It took about 20 minutes to go through everything, so I guess we'll let the news play out for a bit. And again, if you have any questions, obviously, don't be afraid to ask.
Good catch when they did a $1 billion buyback. But the conference call itself was just jarring. Now, there were no curse words, so it's a little step up. But you can't just come on and just say, you know, we're the best, we're the best, we're fabulous, we're the best.
Well, they position themselves very strongly, right, in terms of at the forefront of AI.
Oh, yeah, they're AI.
Everybody's AI. But
I had Xylem's AI. I almost, you know what, if no, Restaurant Brands has AI. They're trying to figure out whether to use the...
Doesn't take away from the fact that that stock has had a great year.
Jensen Wong speaks today. Oh, I mentioned Jensen Wong. He gets mad at me. Who do you want me to mention?
I don't know who you want to mention. I'll mention all the automakers, including Tesla, of course.
Okay, I'll mention.
I'll see you.
I'll see you and raise you with John Stankey.
That's down 1.75%. GM is down.
Well, because the September 14th strike is for real. I really believe it. I've gone on record with Carl. I think it's going to be a strike, and I think that they are back to a class warfare situation, not unlike what I see with the FTC when they meet with Amazon, which I don't think is going to go very well. Jassy reports an amazing number. There's people absolutely love Prime Day. He's lowered the price of pretty much everything, including, what, 45 times he's cut the price of Amazon Web Services? But no, he's in front of the FTC for doing, I don't know what, monopolistic characteristics.
Right. Well, what they talk about is
what does that mean going to be like?
Their ability to suppress things that otherwise would occur as a result of the power of their platform.
Well, look, the
FTC's view, it senses, we should not just be focusing on consumer price.
I know.
There are broader implications.
Look, I mean, the FTC...
Because of the size of these companies.
Look, the guidelines are about competition, and I'm not going... Look, I think Amazon's great. It's unlike Estee Lauder, which you insist on talking about, is owned by my charitable trust. Amazon's a very big position, and I would tell you that I think that meeting is going to go very badly for Amazon, because Amazon is a large company that Lina Khan, the head of the FTC, I'm sure believes abuses its market power and wipes out competition. So therefore, it's right in her crosshairs.
Well, after Amazon's comments about North American retail, Jim, we at least have Walmart with a new 52-week high.
You know, Walmart is, at this point in the economic cycle, when people feel that they have to cut back, they go to Walmart. Walmart has unbelievable prices. David, you and I have to go to Walmart, because you will not believe the apparel.
You've been saying this. You've been saying that they...
I have to tell you...
What, are they moving into Target's
I think they are.
sandbox?
We went to Walmart. We expected to go in, buy a couple of things. We ended up spending a couple $100, getting some really unbelievable... Now, they like to talk about how much they have American, but what I love is that there are countries, and this is not something they talk about, but I wish they would. There are countries basically where they're just a huge factor that are poor countries. And they want, of course, you know, they've got to buy America, and that's a lot of that is grocery. They are a change company where I am sure if we could get Doug McMillon to talk about what he's doing worldwide, buying stuff instead of China, it is remarkable. They are one of the reasons why China exports are weaker.
Right. Well, that would, as we pointed out, through the years, a lot of the shelves were filled with
they're remarkable
products that were made in China. They always, of course, came back and talked about, as you said, grocery obviously is an important component, and they're not getting stuff
arts and crafts aisles.
But how are you able to source? Are you sourcing from other countries?
From Jordan, from Sri Lanka,
because
from Mexico,
made in the USA is great,
Pakistan.
but it tends to be more expensive.
Well, but the prices they have are, I can't believe that they have these prices. I mean, I found myself buying in the pencil and pen aisle, buying everything they had. I did. I bought everything they had. And they were made in countries that I felt great about supporting.
Guys got the Dow down 318, which is essentially going to take us back to maybe 80 points above Friday's close. So we've given back most of Monday's action. Almost every sector is red. Healthcare is the only exception, but financials, materials, energy all down 1.5% to 2%. Watch bonds today. We get a 3-year note auction as $103 billion in treasuries auctions begin for the week. That's going to be very important for the markets, obviously, with the 10-year sub 4. Back in a moment.
Also, Lucid retesting that anchored VWAP, so could be a thing to be paying attention to. How do we start reacting to that? The SPY is about to hit down, or the S&P in general is about to, or has just hit 1% down on the day. So we'll see if we see a bit of buying pressure. Sometimes you get a bit of a bounce off that sort of level. So we'll start seeing how that plays out a bit more. Again, Palantini, there's lows. I want to actually check AMC. Selling off pretty brutal now. Did actually open up for the day, has just flipped to red. Now down 1% on the day. Looks like we could be coming in to test that $5 psychological support. So we'll see how that is. Again, I do think this could be quite a nice name on the earnings release, which is the main thing I'm going to be paying attention to. Ideally, the report comes in somewhat strong, or at least is taken as strong. And if we can see a gap up to at least kind of $7.30, ideally $10, then I'll be looking at it short bias. But again, well, the $10 is quite unlikely, not moving 100% on earnings. But on a stock like this, you could definitely see it kind of push to $7.30 if the earnings are taken well. And again, then I'll be looking for a short bias play off that release. Also seeing quite a lot of strength in Tilray. I don't really know why we're moving so kind of strong, because we did gap down quite bad yesterday, and now we've just gapped, basically given back all that loss for the last few days on this stock. Today, don't think there was much news. Oh no, said Monday it has agreed to acquire 8 beer and beverage brands in an all-cash acquisition. That's Monday though, so they sold off that news and now they're getting bought into. Don't really know, I probably won't be touching it anyway, so not the end of the world. Let me just make sure those levels are still the same. Well, it's up 1 cent, but it's not going to make all the difference. that level we're up at here is also actually down at 250 dead on, which is actually kind of a nice level. So we'll start seeing how all these start to move. Looks like as well, not only are we down, oh yeah, so you're starting to get that buy up again. Like we said, when you're down 1% on the S&P, you tend to see that kind of spike of buying pressure come in. It doesn't mean it holds, but you tend to just kind of get a small pop at least. But again, we have broken below that kind of 1 week low. Again, this is just a 5-day hour chart, but showing that we are still continuing this weak trend. And again, that's why we're sick on Apple. They're down about another 0.5% today. You actually zoom out on this chart, super steady downtrend. And again, this is why I quite like shorting, because you see this time and time again. Super slow, steady gains, which again, fine if you're investing. From a trading perspective, though, this is where you can really make the money by playing against these trends. You know, you give them back, where do we go? To around here, which would be May. So you're giving up all the gains from May to August. Well, August 4th it would have been, all those gains in about 4 days. And that's why I like trading short bias, because stocks fall a lot more than they can go, or they go up most of the time. So playing against that trend can be quite good. Now, what you are seeing on Apple, it went from slightly overbought, was pretty fair value on the 6 month, but was quite overbought on the 1 year. What we've done now is we traded back down to fair value on that 1 year. So we'll see how we start to react now. But we do have a support quite close to us at around 173.80, well, 173.90. So if we push down, that's the level I'd be paying attention to. And Apple could potentially hit that today. Yeah, we only need to sell off from here. We would need to still sell off another 2% actually. So yeah, probably won't see that today, but not far off. Probably tomorrow if we continue this downtrend, which will require us to be down about 2.75% on the day to hit that level. So definitely paying attention to that. Could be quite a nice bounce. Again, I'm probably not looking too much of swings off that level, and the reason I say that is, yes, it could catch and then you continue to trend up, but we are still quite fair value on that 1 year, so I'd like a sell off, and then from 161 I could be a bit more bullish on a stock like Apple, so that at least I'm being a bit more patient for that. But again, we'll see how all this starts to react. Don't think there's really too much to go through. So again, if you guys have any stocks you maybe want to go through, we can run through those. Again, Lucid did just test its anchored VWAP, strong sell off this level. If we start breaking those lows, really showing that the anchored VWAP is going to be respected today, and we could look to potentially trade any retest that we get to that level. Also, what's key to know over on Chegg, obviously they had their earnings. We covered that $12 level. Seems like we came to retest it on the open, and we've just failed that level completely. We come back to anchor VWAP. Seems like we failed that. So really, this is quite an ugly sign. We'll probably now see that gap fill down to $10. So that's what I'd be paying attention to over on Chegg.
Kindle KD, which does some great consulting, and they're running off some contracts that were very, very negative. They left over from IBM. He now sells his stuff to everywhere, and look at that. That is something to rave about. Martin is a very, very good man, and is doing a lot of look. Will he be
retesting the anchor VWAP on Lucid?
Maybe the comp. Well, what's amazing is that he's done turned that thing around, and next year I think it's going to be some big earnings. So my hat's off to Martin. Good job.
You'll tackle Lilly tonight?
Yes, and we'll also do a QSR, which is Burger King, and then I've got a really interesting David we don't talk about enough of these. Magellan Midstream's merging with One Oak, and it's One Oak, and also I had Enbridge last night. People can get very good yield from these pipeline companies now, and they're consistent yield. So I'd rather than go to Southern or Dominion, I think people should pivot toward an Enbridge or a One Oak. So I'm looking forward to saying goodbye to Magellan Midstream as a merger. Always liked the company.
We did get West Texas below 80 for a moment this morning.
And look, I got to tell you, we are just swimming in Russian oil. So it's very, very hard what to do. Every time you see China down, you just think, okay, they've got too much. It trades on China.
I think retail gas is topping out here.
Well, we did have the highest gain in gasoline prices in a long time. It's good for it makes it for the Fed even easier. But Harker being our hero today.
Yes.
Why not?
Yeah.
We covered, was there another company? Yes, we covered what, S&P, about 480 of them did?
We hit a lot of them.
I think we missed Chegg.
And Warehouse.
Oh, Chegg, yeah.
Chegg had a look, Chegg looked up 3. Now
First
it's only
victim of generative AI, Chegg, right?
Well,
But it's
no,
up
they've got their
8%,
own generative
but now,
AI.
Well, I know they have it, but remember that quarter
No, that was
where they got
Dan Roswell.
crushed.
I think he cried.
Jim, we'll see you tonight. Mad Money, 6 p.m. Eastern. When we come back, Charlie Ergen merging his major holdings, Dish and EchoStar. We'll talk to him and EchoStar CEO in the next hour as the markets are in sell-off mode. Dow down 375 now.
Also, it does seem like the S&P is about to retest, being down 1%. Again, the first time we hit that level, that's when you tend to get that bounce, which you've seen. Looks like we're retesting it, though. Retest is most likely going to lead to that break. Also have, Tilray is actually now looking super strong on the day, continuing up. Nvax keep coming back to test that VWAP. We'll see how we react to kind of that $9 level if we can continue up. But yeah.
We could stare at the stars and start believing. I'm never gonna survive unless I've got you near me now. We'll try so hard, and I can fight the fire when I'm dreaming. We can stare at the stars and start believing.
Good Tuesday morning and welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber. We are live for you at Post 9 of the New York Stock Exchange. Take a look at stocks here in the early action. Declines. We're down 358 on the Dow. The S&P 500 down a full percent as well. And the NASDAQ underperforming as it has been as we've seen these rising yields over the last week and a half. It's down 1.25%. Again, this comes after yesterday's rebound in stocks. We're 30 minutes here into the trading session. Here are 3 big movers we are watching for you right now. Earnings is the theme. UPS is under pressure this morning, missing revenue estimates, lowering its forward guidance due to, quote, the volume impact from those labor negotiations and costs associated with the tentative Teamsters agreement. Look at International Flavors and Fragrances, IFF, slashing guidance after consumers pulled back during the quarter. That company warning that destocking could continue for the rest of the year. Stock is getting absolutely hammered. And then on the plus side, Eli Lilly, one of the top gainers on the S&P, as Novo Nordisk also heads higher. More on these two stocks and why they are rising so much in just a moment.
Getting some data on wholesale inventories this morning. Let's get to Rick Santelli. Hey, Rick.
Hi, Carl. Good morning. Wholesale inventories are June final, which means we take the mid-month read and toss it. What was the mid-month read? Minus 0.3%. That now becomes down 0.5%, down 0.5%. And here's the thing, okay? Down 0.5% is now remains the fourth negative month in a row. 5 out of 6 have been negative, and you have to go all the way back to November last year to have a positive number. It's the second worst number of the year at 0.5. January was minus 0.6. And if we look at the trade numbers, this is a fresh June number, down 0.7, multiples of what we were expecting. We were looking for a number down 0.2. And in the rearview mirror, down 0.2 becomes down 0.5% as well. And this is the worst number since March when it was minus 2.7%. Back to you.
All right, Rick Santelli. Rick, thank you very much. As we look at stocks continue their declines here, down 354 on the Dow. Guys, there's Fed speak this morning to digest, which is good. I've been gone for a little while, so I'm happy to be back at it. Philly Fed President Harker, who's a voting member this morning, signaling he's cool with not raising interest rates anymore. We've got some sound from an event he did this morning in Philadelphia. Listen.
Absent any alarming new data between now and mid-September, I believe we may be at the point where we can be patient and hold rates steady and let monetary policy actions, the actions we have taken, do their work.
Patient and hold rates steady as the chatter continues, guys, over whether the Fed is going to have to do more rate hikes. I will say, if you were excited about that he signaled that we might not have to do more, he did add the caveat, I do not foresee any likely circumstance for an immediate easing of the policy rate. So don't get excited about cuts. Higher for longer is still the mantra, and that's basically where the market is, not now expecting a hike in September or November, even though the odds are higher for November at this point than September, and starting to cut into spring of next year.
Yeah, still some observers don't even think November will be a move. Goldman is among them. And certainly this paper from the San Francisco Fed yesterday about shelter inflation will add to the Dove's hopes. Where
going
they
to zero, right?
Yeah, they see potentially going negative by mid-24, potentially a deflationary effect in rent comparable to the GFC. Sounds a little bit ominous, but certainly would help ease concerns that there are more hikes ahead.
Yeah, and there's a good chart, which they're projecting the big decline in shelter inflation. You know, the debate still, Thursday is going to be very important. Thursday we get the CPI report, and energy prices are back up, which is not a good sign. Now, it doesn't necessarily feed into core inflation, but we're going to need to see some moderation in core services, because all the moderation from the peak in last fall in inflation in core, David, has been in goods, not in services. And the biggest battle here for the Fed is going to be on wages, because we still have a very tight and hot labor market. Even if it is cooling on the headline numbers, 3.5% unemployment. This morning we got the NFIB, the Small Business Optimism Survey. Overall headline, little more optimistic, still pretty pessimistic. But what I pulled out is the jobs numbers, because this is a chart that indicates that there are still a lot of businesses out there that still have unfilled jobs and openings. And just to put a finer point on it, you know, in terms of the numbers, owners plan to fill positions remains elevated, 17% adjusted, planning to create new jobs in the next 3 months. That was up from June. Still record high, but it's still very high.
We still have
wage pressure.
Right, we still have more openings than we have workers, essentially.
Exactly.
Which, as to your point, conceivably will keep pressure on wages. And therefore, what? The Fed just...
And therefore, Fed higher for longer. Question is, does it go even higher?
That continues to be the question. I am curious about this San Francisco Fed seeing housing inflation not just slowing, but going
Zero.
Zero. What do we know? What is going on there, or what they see happening as to what would cause that?
It's just a model, that they plug in their models. We've heard that shelter inflation is coming down, and the reason we haven't felt it or seen it yet is because it hits with a lag. Don't know their exact methodology here, but it suggests that it's going to come down
sharply, and then go.
We have Compass
well
CEO
below.
later on today. On the show this morning, we'll ask him about it. But I think the overall question for the market, why Thursday is going to be important, why Jackson Hole on August 24th through 26th, which is ahead of the September meeting, is important. Is how sticky inflation will remain, right? Will they get down to the 2%? So far, it's come down pretty dramatically, but there are signs that the economy is not collapsing and that wage pressures certainly and services pressures remain in this economy. On the other side, I don't know, Moody's downgraded the banks today and cut the outlook on a number of banks, which is another reminder that have we fully dealt with the problems in the regional banking sector, including commercial real estate, David, which Moody's was sure to highlight in this downgrade?
Again, when it comes to saying commercial real estate, you have to be, have to distinguish between warehouses, for example, which are doing just fine, and office space, which is really what we're talking about in terms of weakness. And no, we're going to see it, but the question is, will it take time? Will it be over a longer period of time where the banks are capable of taking the hit? Certainly the big banks are. The question becomes for the smaller and or regionals where they perhaps have some more concentration in office space in particular, in their particular areas, where they're going to get the keys back from certain developers or have to extend and pretend.
Yeah. By the way, worst day here for the KRE since early May. So that's going to take you back a bit. Also, this report on revolving credit balance is down for the first time in 28 months. Typically not a great signal if you're looking at recession signals when it tends to fall.
We're going to get consumer credit numbers at the top of the next hour. But I did note in the Moody's, first, it's always interesting to debate whether these downgrades matter.
Yeah, I'm not sure they do.
For the banks, I don't know. I'm sure you talked about it last week with Fitch in the United States. Ridiculous downgrade.
It came up once or twice.
But with this one, it does seem to have an impact on the stock prices. But also, the stocks have had an incredible run.
They have.
Since they peaked. I think the KRE is up more than 30% since
particularly after
trough.
earnings. So many of the regionals were the best performers for the month of July. In fact, the entire list was made up of the regionals. Speaking of good performers this morning, take a look at shares of Novo Nordisk or Eli Lilly. We've got some important news this morning from a study conducted by Novo Nordisk for its weight reduction drug. The drug is called Wegovy. 18,000 patient study undertaken over 5 years. Average duration of use of the drug was about 30 months. And what they were looking for and what the market was very much focused on was not weight reduction. We know it's already doing that. But what else it did for you in terms of cutting the risk of heart attack, stroke, other cardiovascular or main cardiovascular events. And it ended up being at the very top end of market expectations and being very meaningful clinically. And that's just been huge news, not just for Novo Nordisk, but for Eli Lilly as well. Its entrant, of course, in these GLP-1s, as we call them, is Moderna. And Lilly is now sporting a more than $500 billion market cap, which puts it well above the second largest pharma company, that being J&J, at about $450 billion. That just shows you, and much of that has been due to, of course, the views of and the potential sales for these weight loss drugs, which clearly will have a benefit beyond that, including cutting heart attack risk, stroke risk, and the like, and therefore enhancing their ability to potentially be paid for by insurance and or even Medicare. On that front, let's get to Bertha Coombs, who I'm sure has a much better sense than I do in terms of that important part of the debate here, because it's such an important part of the overall market's view of these drugs, Bertha, in terms of whether they can get insurers to pay for all of them.
It really is, and we've heard from a number of other parts of the industry that have reported, whether it's McKesson that said they saw huge interest in pre-authorization services because of these GLP-1s, or the insurers who have said that employers have started to ask for more qualifying and more pre-authorization and more sort of limits on how these drugs get prescribed. Nonetheless, when you start looking at this data, it does become a question of whether you want to, in a sense, pay now or pay later. They're very expensive drugs, but a lot of folks are pointing to the fact that obesity itself is very expensive, cardiac issues, high blood pressure, they're all issues that contribute to long-term disease. So if these drugs can mitigate that, that is something that a lot of employers are weighing, a lot of folks in the healthcare industry are weighing, and it's likely to just galvanize that much.
Okay, guys, anyway, we kind of watched out for the key things. I think the main things, especially like kind of for the next few weeks, are just going to be the earning plays. S&P's on the low, so we'll probably trade the futures tomorrow. So we got the crude oil on the Thursday. We have the nat gas trades, but I think for now it's just going to be waiting for the options trades off these earnings. Obviously today there wasn't really much of a movement. It was pretty lackluster, so no trades really to take. Took a quick day trade on Nvax. Right now we're still in it. We got to stop below the low, but it's basically just see if we can hold this anchored VWAP, which looks like right now it'll be fading, bull targeting around that 840. It will be normal VWAP, but we got to stop at 790s. What is it? We have a stop at 794. So again, as long as we can hold that, we'll be all right. But that's near enough a break-even stop. I think we got in at $8 on the mark, so we're literally risking 5 cents. We can not going to make too much difference. So we'll see how that plays out. But we're going to end the stream here. We'll be back tomorrow, and again we'll have a video out tonight to cover the key earnings plays. So I hope to see you in those, and that's it. Peace.